Good morning, everyone in Stocktwits Nation. It is Wednesday, July 16th. I am here, as always, with Shay Boloor. I am Katy Perry, and Tom Bruni is back because it's Wednesday. What's up, Tom? How's your week going?
How's it going? It's good. Lots of stuff in the community. Excited to be here and talk about it.
There is a lot going on. We have bank earnings. We have some AI companies reporting. The markets dipped yesterday after a hotter than expected CPI. But nothing too dramatic going on there. NVIDIA scored export approval to China. We talked about that yesterday as well. Overall, though, indexes, especially small caps, there's some pulling back happening. Tom, what are you thinking about sentiment right now as you look into the data in the community, specifically around the Russell 2000, but the major indices overall?
Yeah, I think there's no real need to overcomplicate this. We're up, 35% in the small cap index, similar for some of the others since April. So in 3 months, we've had this record rally, and it's caught a lot of people off guard. But we're kind of in this chasing phase where you're seeing even the, you know, stocks that arguably shouldn't be going up are going up, and a lot. And so we're just seeing this kind of rotation from, every 3 or 4 days, there's this new area or new group that's seeing inflows from traders. And so you're just seeing as the major indices get extended and as they approach technical resistance levels where people are starting to take some profits, you're seeing them jump down into the individual stocks and play more there. I think, earnings season kicked off yesterday. We've got ASML, which we'll talk about, kind of reacting to what I understood was a pretty good report, but it's trading down. So it seems like the market was kind of priced for perfection here, and any news that's not excellent is going to cause the market to kind of pull in. So we're
Yeah.
extended, and we're just kind of seeing some of the hot air come out of the market right now.
Let's focus on ASML because Shai, we were talking about that earlier in the week. For everyone at home, this is a Dutch tech company. They make very advanced machines that are used to build the chips that power things like smartphones, laptops, servers, cars. They specialize in EUV lithography. So it's a cutting edge way to print microscopic circuits on next gen computer chips. The way I kind of read this, Shai, the way you described it is, I don't know if you've seen the movie Swingers, but there's that scene where he's like, I'm the guy behind the guy. Like they're the guy behind the guy, right? They're at the beginning of the value chain that powers other players.
Yeah, so the way to think about ASML is you see all the headlines, like to go back to your metaphor we just mentioned, like you see every headline be about foundational models, LLMs, GPUs, all these advanced chips. They all run through ASML's machine. ASML is truly the kingmaker of the new digital economy. So why are they down 7% when the most important metrics of the earnings report, revenue, EPS, bookings, all a massive beat on Q2, which also indicates, by the way, that the AI party is extremely strong and it's going on way greater than expected. But it's because the commentary from the CEO was somewhat muted, where he didn't confirm 2026 growth. Some of the comments that he was making was they're preparing for growth, but it can't confirm it yet, given the macro and geopolitical uncertainty. Tariffs. This is probably going to be a very common rhetoric that's going to be used this upcoming earnings cycle, and you're not going to see a lot of aggressive tones from a lot of management, because why would they stick their neck out when, yes, we have a sandbox of risk what the tariffs are going to be, but it's still a unknown variable into their calculus of how to or estimate the cost of their businesses in the next like 3 to 6 months. So you're going to see a more cautioned tone. From my perspective, ignore the tone. Look at the throughput. Like ASML just had a massive B on the bookings. That's like a huge tell. I think that for the next 12 months, their backlog is booked up already. So they have the demand already over there. And I think that I'm blanking on the product name, but it's next gen high NA EUV system. I think it's like the 5200B. it's supposed to be delivering 50 or 60% productivity gains, and also like enable like 3 times the transistor density over what it currently has right now. That's being shipped. So it's the next gen of their product is already being shipped. And I think that's it's going to cause like the next derivative of or next wave of their growth. So either way, I think that this is where their earnings story is. Like every generation of tools can become more productive. It's going to be more indispensable. And I think that when you have firms like TSM, Intel not able to replicate your product, proves that you have a monopoly. And clearly, the new digital economy is just getting started, and AI is very real. The kingmaker is going to be eating well, so I would ignore the tone. Down 7% to pre-market. Like maybe the appetite isn't buying the dip just because the market is a bit overextended in the near term, but there's nothing wrong with this earnings report. Just a caution tone from tariff drama.
Yeah. So what do you think, Shy, this is going to be a signal for what we might hear from TSMC tomorrow? Do you think they'll have a similar sort of results mixed with a muted tone in the delivery?
I believe so. I think TSM also reveals their monthly numbers in a similar fashion that Costco does. So the earnings report tomorrow probably will be a nothing burger. But yeah, it's going to be a cautious tone. I think it's going to be a cautious tone across the board if you're not a hyperscaler. I think first off, Nvidia will not be a cautious tone because they are just the heartbeat of the new digital economy. And if there's the demand slippage on one part of the world, it will get scooped up by a different part of the world. And we just got news this week that they found not a loophole, but an alternative to their China drama. And that wasn't baked. The China revenue is not baked into their guidance right now. So like they were already going to be on their earnings report. Now add in China revenue that's going to be coming to $20 billion, probably $30 billion next year. Will start hitting the bottom line for them. They're going to be like, wow, chef's kiss. And I don't think we're going to see below $100 again with them. But I think everyone else, like, yeah, it's going to be cautious tone and caution tone. And I think I'm a bit worried on software names. I don't think that, like, this is why it's so important to like zoom out and look to the left, like see what has happened entering these earnings prints. A lot of names have gone through multiple expansion, and with that entails higher expectations. And I think that this geopolitical uncertainty is going to tame a lot of tone from management on conference calls. That's not going to be justifying a lot of the multiple expansion we've seen in the past 2 months.
Yeah, Tom, I want to kick it over to you because you kind of kicked off here talking about the market's pricing for perfection. Are you seeing that sort of sentiment in the Stocktwits community where people are just accustomed to results now, and any sort of indication that things are not extremely bullish could be taken in a way that maybe be more dramatic than in other environments, such as the case that we see here with ASML?
Yeah, I mean, there's only so far that the rubber pen can stretch before it gets snapped back in markets, and we're just seeing mean reversion in a lot of these names. I mean, coming into today, ASML sentiment on Stocktwits was 96 out of 100. It was extremely bullish, and we're seeing that kind of extreme reading, either year-to-date highs or multi-year highs in these readings, you know, kind of across the board in some of these leadership stocks. What I think is important is just kind of talking about the time frame. So if we talk about, you know, if you're a trader, yes, obviously this is an opportunity for you to either try things on the short side, lighten up positions, use this as an opportunity to reposition your portfolio ahead of some volatility. But if you're an investor and you're seeing something like ASML down on pretty good news, you know, you have to think about the broader AI trade, and that is clearly still intact. You're just seeing rotation in terms of where it's being traded on any given day. I think, you know, Apple and MP Materials came out with some news today or yesterday, basically. You know, Apple committing to purchase a lot of kind of rare earths or whatever materials that they need for their iPhones and manufacturing. So, you know, the broader AI trade, when you look at something like either energy or manufacturing, or there's so many different angles to the AI trade, and at any given point, one of them is working. And so that to me signals that investors are not worried about the long-term AI trade. They're just repositioning based on where they're seeing opportunity day to day.
Yeah, you mentioned Apple. So they announced, or MP Materials rather, which is the only U.S. rare earths producer, announced two major deals: $500 million with Apple, as you referenced, Tom, and then a $400 million investment from the Pentagon, which we briefly touched on yesterday. We're continuing to see those government funds shifting to AI and the future of defense, as Shay calls it. The Pentagon deal includes a 10-year purchase guarantee. So all this is designed to strengthen domestic production of these necessary materials that are going to power sort of these systems of the future. I want to turn brief. Oh, go ahead, Shay.
I actually want to talk about MP Materials because this is what an inflection point looks like, and I think that people are seeing this as a commodity trade now. That's just like getting a catalytic news, and like that's it. It's going to go up and go back down. I don't think it's going to be that. I put MP on my watch list on both my small cap and growth portfolio because I think this is the beginning of a massive move, probably for years to come. Like we just witnessed the Department of Defense become the largest equity holder in MP Materials. Like let that sink in. Like it's not just a typical grant or a one-off contract. It's an equity stake. Like this is something that they also put a 10-year guaranteed price floor of for their product. And I've never seen anything like this for a publicly traded company. I think that this is not just a random bet. I think that this is a company that has a full institutional weight of the Pentagon behind them, and I think that is going to be a massive inflection point for the business. And this was before Apple even participated in that, and so I think that this really did flip the script for MP from being somewhat relying on selling concentration to China to now being the one company that can anchor a fully domestic rare earth supply chain on a new digital economy. Like I've been saying, that's just getting started. So I think that the window of them being a commodity miner is closing fast. And this news the past week completely re-rates the company that it needs to be on everyone's watch list.
Yeah, I think you made a good point, Shay, and just stepping back how rare this is. That governments, particularly in the U.S., making these direct equity investments, usually it's a bailout, an economic crisis. Other times, like historically, strategic industrial initiatives, and I think this would be counted there. But this does not happen very often. So I think it is, to your point, different than signing any other partnership, even more substantial than Apple, I would argue, just because this doesn't happen very often. And I'm curious if you think, based on this and some of the other moves, you think the government might make more strategic investments in some of these publicly traded players that shift influence back to the U.S.
I think MP is very specific because I don't know if another company has, like they have, I want to say it's like 10% of the global supply. So I think that they're manufacturing magnets at scale for the first time in the U.S. in decades. That's something that's rare earths have always been a major pawn in the negotiation. Not pawn, it's bigger than a pawn. Major lever that's been negotiated between U.S. and China, and I think that it made too much sense for national security purposes that they start pushing MP a lot more domestically. So I don't know if there's another input in national security that's as easy to pull that rare earth, because MP is just that one company. The rest have like a handful. There's some like you have to pick and choose. Like for rare earths, it's just MP. Like they had a 3-segment machine. It's like upstream mining, oxide separation, and I'm blanking on the third one. I think it's something with like probably magnet production is my guess. But I think we're approaching the part of the story where integration starts printing returns, and I think that knowing they're at an inflection point in their business model, it makes so much sense now to have the weight of the Pentagon behind them and reinforce and shove all in on rare earths. And I love the move on both sides.
I mean, looking at the chart, they're up 255% year to date. Tom, any other community? It looks like on Stocktwits, people are pretty bullish on MP Materials. Any other thoughts around them or sort of this strategic investment from the Pentagon or Apple?
I think just generally people are using MP as like a framework for how they think about other small or mid cap stocks that might be the next target. Obviously, the U.S. is making these investments and they're serious about it. So any domestic player that could play a significant role in that development is going to be a target. So that's what people are looking for. I mean, chasing MP after a 250% run in the last 3 months is a little difficult. So people are looking for the next potential MP materials out there.
Yeah, let's flip over to the chat. You guys have been very chatty this week in the chat. We love it. We have Nasir asking for some views on Rigetti. If you're a follower of this show, you know quantum is a very key topic that we cover. Rigetti announcing that their new 36-qubit quantum computer is significantly better than their last model. Their biggest improvement for the company is that it makes fewer mistakes. So it's claiming 99.5% fidelity, which means basic operations are more reliable. And they're also reporting that they cut the error rate in half. Shay, I know quantum, you follow a few quantum companies. Thoughts on this bit of information and just overall, like we haven't talked about it in a while, but just the continued development in the space and ongoing commercialization?
Yeah, so before I begin, want to reiterate, IonQ is a customer or client of Futurum. However, if you guys are following this freaking show, I started at Futurum 6 weeks ago. When was I an IonQ shareholder? A year and a half ago. So I just want to call that out. It's like my perspective might be a little weighted. I mean, it might be seem weighted because IonQ is a client of Futurum, but I've been a shareholder for multiple years. So that's I want to get that out the way. I think that a lot of the quantum names out there besides IonQ is a dud. I really do believe it's not going to make it. I think the reason for that, Rigetti is kind of pursuing the same approach that Google and IBM is. Same kind of architecture with their superconducting qubits. Although this is a bullish news story today, I still believe that they don't have Google's R&D depth. They don't have IBM's enterprise cloud stack. Rigetti is more grant driven. It's their fidelity is still lagging. Like even though today's news is bullish, it's still lagging, and they have very little commercial traction, like very little. And I think that they're competing against companies that can outspend them 10-1. So I think their path towards platform ownership is very, very thin. And IonQ has a completely different approach. They are truly following the NVIDIA playbook from 15, 20 years ago. So I think, I don't know, I think IonQ is truly the only quantum player that's investable. But quantum is a bubble right now. It's just there isn't that much there's not that many pure plays that you can actually invest in the public market. So that's why they're getting a bit aggressive on the re-rating. However, I think Rigetti, I just don't see the case. I don't see the case for D-Wave as well. I don't see the case for any other quantum name out there. They're very specific case studies. They're not really trying to tackle the specific scalability that IonQ is on the quantum front. And yeah, I mean, what's Rigetti's market cap now? $4 billion is nuts. That's a crazy market cap for Rigetti. What's their even revenue? Let me see what their revenue is. Rigetti's revenue is, oh my God, $9 million. That's absolutely insane. They're supposed to be growing to 23 next year, but this is nuts, actually. Yeah. They're trading at over 20 times 2029's revenue. So over 20 times price sales to that. Where what's IonQ? Sorry, I'm gonna make it more even. I'm gonna look at IonQ, so not so bullish. I mean, IonQ is making 86 mil this year, 170 mil next year. So like their valuation, let's see, is, oh my God, it's $10 billion. It's pricey. Again, quantum's super pricey right now.
Yeah, I mean, I'm looking even at Rigetti. Their high in the last year was actually up to $22 a share. The sentiment's shifted around a little bit in Stocktwits. It's currently, I'd say moderately bullish, 64, but just a week ago is at 45. So it's kind of jumping around. Tom, thoughts on just quantum? And Shai's calling out something important, which is sort of, this is one of those thematics that these companies are wildly different in their approach to building. I know D-Wave, I interviewed their CEO. They're approaching it from an annealing point of view first. There's all these intricacies and nuances. How do you think the
Yeah.
community is sort of digesting this quantum opportunity?
Yeah, I'll be honest. I think most people are trading it on technicals and momentum as opposed as opposed to fundamentals. I threw up this chart of QBTS. I think this one's the most interesting out of all of them. Right now, it's basically consolidating above where it came public. And if you look at sentiment on Stocktwits, it's bearish to extremely bearish. So I think this is a situation where prices are digesting the recent gains quite well. Sentiment is kind of resetting, and if you start to see, some short-term momentum pop up here again, maybe today's news out of Rigetti can be kind of the catalyst to get QBTS going as well. But I think this is one that's on people's radar just from a technical perspective. But yeah, if you ask the average retail investor kind of what the bull case, bear case for quantum is fundamentally, they're not going to know. It's they're trading vehicles right now, and once they develop clearer core businesses, then people will start to invest on the fundamentals. But it's too much speculation right now about where these are going to end up.
Yeah, that makes sense. Let's shift as we're near the opening bell here in a little bit. Back to sort of some of the more traditional Wall Street names. So we have the bank earnings this week. JPM had a pretty strong readout yesterday. Goldman following suit today. So they posted second quarter earnings that really blew past their expectations. So their profits up 22% year over year. And that's above the $9.69 forecast, landing at $10.91 a share. The one kind of the dark spot, I guess, or the cloudy patch for them would be in asset and wealth management, and that dipped slightly. But they made up for it elsewhere. And CEO David Solomon, that's DJ Solomon for those who follow his music career, said the bank is benefiting from the upbeat markets, but they're keeping a close eye on global uncertainty. And I literally read, to your point, Shay, I read this same line. JP Morgan, Bank of America, it's like everyone's saying the same thing. What's interesting about the Goldman readout and some of the others is the banks seem to be doing pretty well. Bank of America, less so than the others. And the Goldman and JPM were citing strengths in sort of their divisions that handle M&A. And Bank of America did not do as well in that area. And Bank of America cited macroeconomic uncertainty. So I thought that was kind of weird because you have people benefiting. And I don't know, let's talk about M&A generally, because for a casual observer, it seems like M&A activity is pretty healthy right now. But Bank of America saying they took a hit in that area, whereas others were seeing increased revenue from those areas.
I mean, I can't speak on the bank front on the quality between them, but all I know is that M&A is absolutely on fire, and B of A is not seeing that right now. That shows you everything about their strength in that arena. Yep. Compared to their competition, because like M&A is also going to be picking back up. Like if you want to talk about sitting on the sidelines, M&A was absolutely sitting on the sidelines for years, like for 2 or 3 years. It wasn't because there wasn't any high quality companies. That was not the case. It was just because the environment. Lisa Khan is an awful SEC. She just stopped innovation. So I think that the demand is in a way bottlenecked, where they need to acquire, and especially with this AI tsunami that's coming, being a layered product in the stack is potential. You might die. Like you might just die from the AI. You might drown from the AI tsunami. So like they might be willing to sell a bit right now, knowing that we can't compete with the platformization. Like for Perplexity, for example, like Perplexity is an incredible LLM, great at code generation. They might be $30 billion market cap right now. They actually might be $5 billion in a couple of years if they don't really specialize in a niche, because there's an oversupply in foundational models right now. Not just domestically. Gwen and I'm blanking on the DeepSeek name, but DeepSeek and Alibaba have an incredible Chinese model, and you're seeing just an oversupply of foundation models in the U.S. that they won't be able to compete with the distribution capabilities of the Google via Gemini, even Meta with all their products. So like I think that for Perplexity, like they might be in trouble unless they find a niche. Like I forgot what podcast I was watching. I think it might have been All In. They made a very interesting comment where they should just try to disrupt Bloomberg, like become the financial foundational model. And like that's interesting. That's very very true because out of all the foundational models, like cloud is like one of the best for actual historical data for financials, and code generation is really great as well. So like if they conquer that niche, that might be a really great acquisition target. But either way, all I'm trying to say is a lot of these Perplexity is a great example of like you might be valued this, but in a couple years you might be down 70% because of an oversupply, or you don't need the necessity of what you're conquering right now won't be there.
Yeah. It is interesting to see these tools sort of branch out. I don't know if you guys saw yesterday, Anthropic announced Claude for financial services. I had 4 different people text me it. One as recent as this morning. So they're rolling out this financial analysis solution to help financial professionals make investment decisions, do market analysis. Curious if you guys have checked this out or have been following this. I think this is kind of getting at what you were saying, Shy, of like, if I'm Bloomberg terminal product team right now, I'm like, all right, I gotta get my act together. I haven't been in there in a while. Don't know what their AI offering is, but a lot of buzz around this and Claude in general. Did you guys catch this bit of news from yesterday?
I did. I think I might have said Perplexity by accident. I meant Anthropic in the Bloomberg disruption.
Okay, perfect.
But no, yeah, I saw it, and I think that it makes a lot of freaking sense. And the only annoyance as an Amazon shareholder is that I think that every hyperscaler needs to own their own foundational model to improve the it's that's the future world. Like you just have to own it. I think Amazon's like kind of not wanting to do that because that 33% ownership, or maybe it's like 40%, I don't know, of Anthropic. It's like but I think that this makes sense. Cloud AI, like I've heard awful things about Bloomberg for a long time. The terminal costs like what, 25K a year.
Yeah. Great business for a long time.
Yeah, it's I think it's $100 billion business, which a lot of people don't realize, but it's ugly. It's very ugly and it's lack innovation. I think a lot of from my investment banker friends, like they just use it as a chat feature, which is crazy for $100 billion company. But no, I think it's really important to find niches in this new digital economy when there's an oversupply of your product.
Yeah. Tom, what do you think the impact of these types of tools will be? I mean, one thing that's fascinating about Stocktwits is just over time, the ability for you to take data that you're ingesting as a platform. And like we showed the Coinbase example yesterday. This might be a good time to bring that up. But how platforms are able to turn this data.
That was a loud one.
Whoa. Is everyone,
we're 2 minutes
awake? Whoa. Oh, false alarm. False alarm.
We got early access to the markets here. Talking about technology. Yeah.
Amazing. But yeah, Tom, I'm curious what you think of just the ability of turning data into insights and sort of how you view it at Stocktwits, but also maybe we can go to the example the Coinbase example we shared yesterday, which I thought was interesting.
Yeah, so a lot of thoughts here. Obviously, the last decade has been about commoditizing access to markets and commoditizing data. So the problem now is not access, it's an overload of information. And so AI is going to be the tool that allows people to digest and personalize investing information for their specific strategy. All 3 of us have very different approaches to the markets. We're looking at different things. And so whatever platform can learn the user and deliver them the insights and the data that they need to make proper investment decisions is going to win. And that's kind of what we're focused on here at Stocktwits is, we have the data, we have the community, but how do we layer AI on top to make it more digestible, make it more personalized? And that's what you're seeing with our AI earnings summaries, with why it's trending. AI is the layer that takes all of this information that has now been democratized and makes it digestible for people. Before we get to coin, I have a couple thoughts on the banks. Just to give the viewers a fundamental view here. If you're talking about M&A, just look at the performance of Goldman Sachs. That is the only bank that really leads in this space. Morgan Stanley is next. They have a smaller asset. Oh, there we go. We get the actual opening bell.
I have trust issues now. Let me see.
Yeah, we should just do that randomly throughout.
Oh my God, it's a jump scare.
Exactly, yeah. But no, Goldman is the read on M&A. Morgan Stanley is a read on M&A and asset management. Bank of America is a consumer bank generally, so they're a read on the consumer.
Yeah.
Wells Fargo is another consumer bank, and then JP Morgan is a mix of both. So JP Morgan is kind of best of breed. If they're doing well, generally things are going well across the board. One thing I did find interesting was Jamie Dimon said yesterday, I think he was answering an analyst question about stock buybacks, and he was basically like, we're not buying back stock at 3 times tangible book. So even he is saying that the stock is expensive at current levels. And so I just thought that was an interesting comment because he's generally pretty cautious about his outlook and tends to, you know, not sandbag it, but he definitely plays a more cautious tone when it comes to guidance. And so he continued that process, and also just the offhanded comment about the stock being expensive, I thought was interesting. Doesn't really seem to be bothering the market all that much. But.
Yeah, he had a busy day yesterday. Here in New York, JP Morgan put on their acquired podcast, and they sold out Radio City. And I guess they brought out Diamond as a special guest. So he had a busy day. And
Yeah.
You're right. I think he does often, people try to goad him into making controversial comments, and he won't do it. I think earlier in the week, people were trying to get him to dog Powell a bit, and he took the high road. But I love that insight on banks. They have different, I didn't realize they had different strengths or places to look at for signals, even though they have similar services across, they have their areas of specialty, and you should kind of look to those as the key indicator of how their businesses are doing.
Yeah, exactly. We can get back to the Coinbase example if Keith, if you want to bring it up. We'll stick to financial services for just a second here. Essentially, what we're seeing, we're seeing Coinbase make new close to all-time highs. Its market cap hit 110 billion on either Friday or Monday, whatever it was, and we're seeing Stocktwits sentiment actually lagging price. And so I kind of flagged this as, after 180% rally over the last 3 months, again, another situation where people are saying, whoa, enough is enough. Maybe I'm not going to chase Coinbase here. And so I think more generally, this is just kind of along the same theme that we discussed earlier. People are taking profits. They're looking for fresher opportunities. And, I think we saw it in the crypto space. We had a great weekend, right? Bitcoin broke out on Thursday or Friday last week, ran up to 124, 125K over the weekend. And then Monday, we faded. And then yesterday, was our first down day in quite some time. So I think, again, we're kind of seeing some of this jubilation come out of the market. And again, it's a short-term reset. I like to say it's a pause that refreshes and allows, the market and price discovery to catch up, and then we can set up for our next leg higher. But this is another just example of what we're seeing in the Stocktwits community of people getting a bit more cautious when it comes to Coinbase and other leading stocks.
Yeah, is there any indication, we talked about profit taking for the past few days. Is there any data available or indication of like where is the money just sitting on the sidelines in a money market? Is it going into less riskier assets? Is there any sign of kind of where that profit taking, where that's going?
Yeah, it's tough to tell. Obviously, we're not a brokerage, so we can't see that data. But and any of the data we get from brokerages or other services is tends to be on a lagging basis, so we'll know in like a month. But what I can see on the platform is kind of what I mentioned earlier. It's just rotating. So instead of owning something that's rallied 180%, you're going to buy the laggard that maybe is playing catch up. So we're just kind of seeing money flow to wherever area that people think is going to hit next, essentially, to use a casino analogy. And as long as people are getting positive feedback that their bets are paying off, they're going to continue to do that rotation and just find the next big winner. One place that money is not flowing, however, is GameStop. I thought it was super interesting. Sorry, I didn't add this to the doc, but
It's
Ryan Cohen
those
was
guys.
out.
No, I love talking about GameStop.
Yeah, he was out doing the media circuit yesterday. He was on CNBC, he was on Fox, he was on basically every channel. I don't really know why, what prompted this, but it was very lackluster because people were hoping that he would provide some sort of guidance on how the core business is developing. And he basically went on and told us everything we already know, which is, hey, we're a much different business. We've cut costs. We're nearing profitability for our core business. We have very little debt. We have a lot of cash. And basically his message was, we are going to allocate our capital to the lowest risk, highest reward opportunities in front of us. And it's like, great, bro. Like that's what all of us are doing. So I just think it's interesting that in this environment where almost anything that you can pick is going up, we've seen GameStop embrace the kind of Bitcoin treasury strategy. It had that initial pop and has now been kind of stuck in the mud since late June. So
Yeah.
Ryan Cohen, I'm I'm a fan of GameStop. I think they're in a great position as a company, but I think they need to get out of this financial engineering nonsense and actually come up with a plan to grow their business.
Yeah.
They're diversifying into collectibles, but if you look at the revenue graph, it's hasn't changed anything. They have to grow sales, and until they can do that, they're going to be kind of Bitcoin one-hit wonder, so to speak.
I was just reading some of the summaries from his interviews, and it is a bizarre media blitz because usually when you have a coordinated sort of attack like this, there's some sort of key message you're trying to get across. I think Robinhood's great at this. Whenever Vlad goes on multiple things, he's got like one soundbite, and that's what he hits on. I think the last one was crypto as infrastructure, and there's like, okay, we need to get this message across because push back on this message. But this does seem a little random. I'm curious, Shy, from your just corporate strategy background, what is it? Just like a way to, like, we just need to get out there. People are talking about other things. We want to be in the news. What would be a reason why someone would go out there and just basically say nothing new, but do it across multiple channels and platforms?
Maybe he sees some squeezy moves in the market. They want to dilute shareholders even more and do a secondary, and in order to do that, make their stock go up a little. I also think like they're screwed. Their business model is dead. It's been dead for a long time. So I don't love the financial engineering. You don't really do the crypto financial Hail Mary unless that's your last resort. Clearly, that's what they need to go push their stacks towards. Like I think if they did that when I initially proposed that a year or two ago, like who knows their financial position with Bitcoin like going up as much as it did the past 2 years. Like that could have been their saving grace, and then from there they could have reorganized a bit, trimmed the fat, become a marketplace for the latest and greatest trend, like Pokemon cards or whatever the new hot pocket is, and they just become somewhat of like just getting a take rate of all those transactions. Like I think maybe that's the route, and still be a gaming company. Or I don't know why they don't have a licensing arranged. Maybe they do with Netflix. Like Netflix is going pretty hard at the gaming realm as well. Like why not have a licensing where you give discounts for Netflix users? You can buy games through the Netflix platform at somewhat of a discount price if you're a subscriber. Like there's levers they can pull, but I think they're like being a bit stuck in mud on which moves to make, and that's why it's like really surprising. Yeah, let's see this.
Yeah,
oh wow,
I was fighting for my life in the replies of on Twitter yesterday.
I'm waiting for the chat just to go off the rails. So far, it's okay.
Do people love GameStop that much? I had no idea.
The ones that
I keep hearing about how collectibles and they're reorganizing their business, and this is going to be the next big. The collectibles revenue has been flat since 2018. Like I don't know what you're talking about, and hardware and software are declining. So maybe it's stabilizing at this point, but until these top line numbers can gain some traction, you can only cut costs so far, and so that's what people are looking for. They're saying, stop with the gimmicks, figure out how to grow the core business, and then we will take you to the promised land. But for right now, Ryan Cohen just went on CNBC and basically, it looked like he rolled out of bed. He was like leaning up to his laptop. Like he had the same basic white background I did. Like, come on, put a little effort in here. I don't know. Sorry. I'm a bit of a hater just because like I see the potential here, and like you can fix this company and really deliver a lot of shareholder value, but they're just like messing about and spending their time on the wrong things, in my view.
I mean, the Bitcoinist treasury people do have the like argument of like scoreboard lately. I think I saw, this is not obviously a corporate entity, but like Odell Beckham was doing a press conference earlier in the week, and he was like, Remember, you guys are making fun of me for taking my salary in Bitcoin. Like, who's laughing now? But you're right. It's not. It's a completely separate thing that's going on next to their fundamental business, which, as you called out, Tom, is like not doing so great. But without that sort of life vest, it's interesting to think about where some of these companies would be.
Yeah, I mean, better than AMC, but that's a very low bar. And so
I haven't
my
I haven't
comments to
seen
blow
a
up.
lot of chatter on AMC lately. Are the AMC people still as enthusiastic as the GameStop people
Yeah, I
in
would say even more so. Honestly, I think
Interesting.
the cult-like following for AMC is stronger than that of GameStop.
Yeah.
Unless Roaring Kitty makes a comeback, I think GameStop will probably just kind of stay where it is. But
Yeah.
AMC is in a much worse financial position. They've got a ton of debt. They can't make money from their core business, which is selling movie tickets. It's like $17 or $20 in New York to go for a single
Yeah.
movie. They've tried to diversify through memberships, through snacks, through merch, through other kind of ancillary benefits for moviegoers, but they're not able to drive enough top line revenue to make a dent.
Yeah.
They
Well,
really need the stock price to move so that they can do more secondaries, pay down debt, and
You should buy some
they're
Bitcoin.
yeah,
Kidding.
maybe. So
Kidding.
well, no, I think they're, again, putting my corporate strategy hat on. AMC's business model is dead as well. It doesn't make sense. They're bloated, etc. File for bankruptcy or do something like that. Have Amazon acquire them. Amazon creates all this real estate, movie theaters. They don't profit from that. That's a break even, maybe even slightly red. Be the massive winner for society because everyone wants movie theaters. It's just a bad business economics of it. If that just breaks even, you can upsell so much, like all the material, all the food that you sell inside the theaters. It could be something that you can it can be Amazon like products, for example, instead
Yeah.
of getting it elsewhere. You can sell ads over there via Amazon because Amazon's killing their ad business. They're starting their they acquired MGM. Maybe that's why they can't do it, because they're
Yeah.
kind of low weight in that. But I just think like a bigger player, like Apple or Amazon, is going to acquire AMC and they're going to make it a break-even business. That's going to help the consumers as well as them just having mind share in real estate across so many parts of the world. But also, this is me talking in LA. I live near the Grove, gorgeous AMC. If you live in Arkansas or you live in somewhere in like Missouri, I know the AMCs in Middle America are just absolutely disgusting. Why would you go there and watch a movie in a really shit environment where you can just go in your living room and watch it 3 weeks later?
Yeah.
yeah, my biggest thing is like I'm just tired of the quote unquote excuses. They every quarter they come out and they blame Hollywood. There's not enough blockbusters. There's not enough
Yeah.
things to get people to the movie theater. Keith, if you pull up a chart of IMAX, IMAX, that stock is at its highest level since
Yeah.
2017. Same business. I forget the other one.
Well, they're well positioned because I think it is like the way it is with streaming is like there are movies that you want to see as an experience.
Yeah, it's
in person.
differentiated. Yeah,
And
so
like
that's the
IMAX
point.
is like we're the place you watch those movies, and it's the best way to do it.
Like AMC is basically replicating a worse experience that you can get at home. So
Yeah.
they need to, develop some sort of pull to get people in the theaters, and they just haven't been able to do that. They've just been relying on, hey, movie going will recover after the pandemic and it'll hit new highs again, and then we'll be able to recover and have a profitable business. But even so, like they're not making enough per customer that comes in the door. Like basically you would have to get every person in the US to watch a movie like once a week or once a month in order for them to make their business work in its current format. So anyway, sorry to bring up meme stocks, but that is something on the back burner.
It's always fun to talk about because there's always a little more character. I was just checking in on CEO Adams X because he hadn't crossed my feed in a while. His latest tweet is funny. I guess they're going to exclusively have the new Eminem documentary. So he says, Marshall Mathers, in quotes, is one popular fellow. His tweet post has been read more than 250K times. So they are trying to do more of these like exclusives to build the brand. But, I love when CEOs tweet. And I've heard through the grapevine that he notoriously does not let anyone look at these before he sends them or is resistant to help. So that Marshall Mathers is one popular guy. I didn't know there was an Eminem documentary, but I will definitely be checking that out. Let's get off of the meme train for a second and check in on what else is going on in the markets today. I mean, we have some Fed comments coming this week. We have Diamond staying Switzerland on Powell. Curious what you guys in the chat are looking at or are thinking on this week. We also have, it's crypto week still. You might have forgotten that it's crypto week in DC. There's some wrangling going on, trying to get some of these bills across. If you remember, there's 3 key bills on the table. The big one people are talking about is the stablecoin bill. And there was a little bit of back and forth. I think there's some pushback from some GOP lawmakers on stablecoin regulations and kind of the ability to monitor individual user behavior with those in a way they didn't feel comfortable with. But as of last night, Trump said he had the votes. So we'll see how that looks. But overall, do you think, Tom, crypto week, is it measuring up hype-wise in the community? Is it something people care about or talking about? Or are they mostly just focused on watching what Bitcoin's doing, which I think pulled back a little bit off of its high that we got on Monday?
Yeah, I think these bills would be supportive of long-term crypto growth, but I think just shifting over the last 9 months from a environment where, regulators were kind of like pro, what's the word I'm looking for? Basically, in the last 9 months, we've gone from a very aggressive SEC to one that is lax and basically allowing anyone to do anything. And so, just look at the fact that we have a Trump and Melania coin. I mean, like, who would have thought that would exist?
Yeah.
So it kind of shows the environment that we're in. And sure, these bills being passed will help kind of drive long-term support and the next phase of growth for the industry. But there is plenty of white space right now for these companies and the industry to operate in. And so, in my view, is if the market was really worried about these bills not getting eventually passed or legislation being not supportive of crypto, Bitcoin would not be trading at all-time highs. We would not be seeing kind of the enthusiasm that we are in the industry. So whether or not it gets passed this week during crypto week is anyone's guess, but I think long-term people are focused on being optimistic and the long-term potential.
Yeah. I mean, anything could change with a new administration, but it does feel like we're almost too far gone. I think the point I realized that was when I think Coinbase sponsored the military parade. And I was like, okay, yeah, we're doing the crypto thing. We're doing it big. So we'll continue to watch those. I think there's a lot of implications on just the financial system, how money's transacted with those. Let's flip over to Unity, though. Unity just getting an upgrade from Jefferies. Shay, I think you follow these guys pretty closely. Am I incorrect? Correct me if I'm wrong. Thoughts on Unity? We haven't talked about them in a bit, so we can frame up kind of what they do at a high level and generally thoughts on this upgrade.
So Unity is killing it right now. I think this is killing it right now by it's up a significant amount. So I believe that Unity is one of those really interesting opportunities. I think it's catching somewhat of a, I don't want to say momentum, but I think it's because Roaring Kitty, correct me if I'm wrong, I think Roaring Kitty was a major, like, he's been dropping hints of I don't know. He's doing something. I'm shocked.
He's like the Taylor Swift of the public markets. These Easter eggs.
He's just Easter eggs. But either way, like Unity is, I do own it. It's a top 15 position of mine now. But opportunity cost has been very real. It's one of those holdings for me where I gut check my emotions with my investing calculus, where I chose Unity over AppLovin, for example, 3 years ago. Dumbest mistake ever, clearly, because of their duopoly position in the gaming engine space. I was like, okay, I think they can figure out the ad space because of their massive presence in the gaming engine as a duopoly. Clearly, I was wrong, but that was because of prior CEO mismanagement of the company, poor corporate governance. They got a new CEO a year ago, maybe even a year and a half ago, and I think they're on the verge of a transformation that the market really hasn't priced in yet or grasped. And I think that for years, Unity has been that dominant engine for developers, kind of seeking a balance between functionality and accessibility, where they Unity never really took a cut unless the developers started making money. So it became a go-to platform for game creation at scale. But there were so many missteps along the way from the previous management where they botched the pricing model. They started going away from like we'll take our cut as soon as you make money into like, well, we're gonna start taking a cut as you make the money. That pissed a lot of developers off, as it should. And that was like the straw that broke the camel's back, and that's what got the CEO fired, I think. But that caused a lot of developer disconnect. They caused a lot of inefficiency and monetization. That caused a lot of churn in their customers. But now the company is shifting back towards a subscription-based model. It's doing price increases rather than just getting money right off the gates. And they are embedding AI across this ecosystem that in ways that I do believe will fundamentally alter the economics of the gaming developing space in their umbrella. So I think Vector is what their North Star is on what the near term catalyst will be for the stock. It's the app loving like competing products. They're hoping that they can finally figure out their ad part of their business by Vector. And if that's the case, I think this is a criminally undervalued stock where, let me see what they're priced at. So Unity right now, by the way, Unity has a very high floor because Netflix and Meta will dream of acquiring Unity. And same with AppLovin. Unity is one of the highest quality tech out there that's just been poorly mismanaged. That's usually a great formula for an acquisition. So right now, Unity is worth $12 billion. After this move, it's more like $13 billion. So they're making $2 billion a year. So it's not too expensive on the price to sales metric. Their EBITDA margins is also 20%. The issue with Unity is they've had back-to-back years of negative revenue growth. Why is that? Unity's new CEO has been trimming the fat. They've been a loss generator for such a long time, where the EBITDA margins were in the negative from 2020 to 2022. 2023 was some one-offs. I'm not going to include that, but that as soon as new management came, they're like, we got to get profitable. We got to cut the fats. So now it's going through that weird reorg, which is causing a top-line messiness. But the bottom line expansion is very real. Now they're going to be a consistent 22 to 25% EBITDA margins. And starting next year, they're going to be growing 10% a year on the top line. Not sexy. I don't think it's like the sexy hypergrowth stock anymore. But if there is kind of a renaissance in gaming, which AMD and NVIDIA have proven last earnings cycle that it is bottoming. That segment has bottomed out. It's actually bouncing a bit. Their duopoly position in the gaming space should give them somewhat of a leeway on their ad vector to start compounding. And when they're trading at only now it's 35 times EBITDA, I think it's like one of those stocks that everything's getting a multiple expansion in the market. This is a name that's not stupid. It's not expensive. It's not cheap, but maybe there's an M&A premium that needs to be factored into the stock that isn't right now. And I think maybe I wouldn't be surprised if it's one earnings report that causes like, oh, this is now they're finally bearing fruit from all the 18 months of hard work. You're seeing like clear skies. It gets that $50 handle as a magnet.
Yeah, when you were talking, Shay, it's interesting you mentioned the potential for M&A with like a Meta or a Netflix, because I think they are, to your point about gaming, they're trying to expand use cases for the tools beyond that space. So you could do architecture models, you could do training simulations, going back to the hype around the metaverse that we saw a couple of years ago. But if you think about what kind of businesses would be interested in enabling digital worlds, I think the two companies you called out would be interesting. Tom, any thoughts on your end on Unity?
I got really nothing other than the stock looks like a good catch-up play. It's hitting its highest level since early 2024. So
that's a good segue into your catch-up play thesis and how that's been developing. Because last time you were here, you were talking about that, right? There's some investors looking at where they could play catch-up with some stocks. Is there any other emerging names since we last spoke that fall within that thesis?
Not really. I think we're kind of in this environment now where people are just because we're so overextended, they're either looking for momentum or bust. The kind of logic there is if you're buying a catch-up play and then your view on the market shifts and you're becoming less positive, you're becoming more bearish, then the stocks that didn't rally when the market was rallying are probably going to do pretty poorly when the market starts going down. So I think that's the biggest kind of shift that we're seeing this week. I mean, look at this morning's news. The PPI number was pretty good. CPI number yesterday was good. We had the Nvidia news on Monday night, and the market is kind of fading. So I'm of the view that sentiment was at extremes, prices were extended, and now we're in an environment where people are looking for excuses to sell. And again, it's going back to sentiment and technicals. Like, it's not news that matters, it's the market's reaction to the news. And I think, you know, a couple days into this week, we're seeing positive news or good enough news that is now being interpreted negatively. And so that's the shift that I'm kind of watching in the market right now and what I'm most interested in. So I'm definitely seeing more caution among retail investors than in recent weeks or months.
Yeah, that's an interesting dynamic to call out as we get even deeper into earnings season. Shay, as we round out the day, any final thoughts, any headlines catching your eye, companies you're watching, things you're looking forward to? I think TSMC is tomorrow, correct?
Yeah, TSMC is tomorrow. Netflix is tomorrow. I don't think either of them really moved the market. I think that like I sold a position yesterday that I've held for 5 years. Like I think that's a great example of
What was
I'm
it?
raising. I can't say. It's behind the
Oh,
wall,
you
paywall,
know
but
I hate this.
yeah.
All right, I
But,
gotta subscribe. I guess I'll subscribe.
I will say though, like I have 15% cash position. That's the highest cash position I've had in quite a while, and
Yeah.
it's just because I don't want to get greedy. Like this 3-year performance, it's freaking nuts. It's just absolutely nuts. Like I think it's kind of like you gotta prepare for the worst type of thing, and I think this earnings cycle is going to be a bit more tame than people anticipate. I think at Futurum, like we believe that specifically networking, AI networking is going to be the best performer in this cycle. Same with NVIDIA, same with AMD. Inference boom is like whoever has exposure to the inference boom we're about to see is going to be the biggest winners. Everyone else, we think it's all right. Zoom to the left. How much has this run? Has it run to the prints? If it's run up significantly, it's going to be a tamed response. It could be a really strong print, go down 8% on some commentary of we're positioned for growth, but we are uncertainty on the macro environment. That's the theme. So be prepared for some really wonky moves on the downside. Like ASML is down 11% last time I saw. So
Shay, I feel like you need to do one of those TikTok accounts where you like assume a personality as a character and you're the corporate strategy person using all of the sayings, because you just like you got them top of mind.
it's not good though, because my fiance, I use them in my conversation with my
no.
fiance, and she hates it. And I was like, it's my vocabulary. You can't have more than one in my head.
Well, I saw you shared the Roth that you're managing for her, which is doing very well. So
Such
you've
a
always
muted
got...
response from her.
Oh,
She has
really?
no. She's just like not a big deal.
I saw it. I was like, damn.
Yeah, multi-bagger in 18 months, like that's substantial. And she's like,
All right.
And tax
you do
free
this
too. I mean, come
yeah,
on.
tax free.
Yeah,
She's-
come on.
Well, her response is like, you do this every day. Like, I think you'd be good at it. So
That's
I'm like,
actually
oh,
not valid thing to say. Like, if you sucked at it, we would have a problem. Amazing. Well, thanks everyone for tuning in today. We'll continue to track the ongoings of the market and the Stocktwits community. And as a reminder, we are live Monday to Thursday, 9 a.m. Eastern. Thank you, Tom, for swinging by on this lovely Wednesday. Thank you, Shay. And we will see everybody next time.